Welcome to the Invested Dads Podcast, simplifying financial topics so that you can take action and make your financial situation better. Helping you to understand the current world of financial planning and investments, here are your hosts, Josh Robb and Austin Wilson.
All right. Hey. Welcome back to the Invested Dads Podcast, a podcast where we take you on a journey to better your financial future. Today, we are going to recap our 2021 predictions and see how we did, as well as
make some new ones,
which
for 2022.
As we know, some of our predictions are pretty bold.
Yes.
Maybe too bold. And we're about to find out.
It's like the font in a really angry email.
Did you know that you can just do Control B and when you highlight a word and it'll bold it?
Yes.
Control I, it'll italicize it.
Control U, underline it.
It's amazing. If you don't know these little shortcuts, you're wasting minutes per month.
Get a whole year back in your life.
Like people who would literally still like right click, copy and paste, or go up to the toolbar and copy and paste. Like I copy and paste a lot.
That's slow.
That would really slow me down. So I'm Control C and Control V.
I had to figure out how to do it on my iPad.
Oh, Command.
So that's
Command C, Command V, Command X. Right.
It took me a while. Figured it out.
But if you're a Mac guy like me, which
you already knew that.
I already knew that. Which if you are a Mac guy like me, you should probably go listen to our iPhone versus Android battle royale that we just published.
Get convinced to join the other side.
Get convinced to stick with your iPhone because that's what the majority of our listeners listen on.
Yeah, that's true. Very little listening on the
very
Google
little
side
on the Google Play.
Yes.
So we're going to revisit first of all our 2021 predictions. We both had about 5 of those.
Yep.
We are then going to pause because Josh has prepared a special once-in-a-lifetime opportunity at a Dad Joke of the Week.
Yep.
Well, once of the week anyway.
Yes.
Then we are going to make some bold, and dare I say, some of them likely too bold,
Yes.
predictions for 2022. So, Josh, I will start us off. Some predictions that I made for 2021. So my first prediction was that the Fed will hold rates steady. Was I correct in that assumption?
You were. And I will say, when you're at 0, there's only one way to go. So you already had 50% of that prediction already covered.
I know.
Where it was at. So, but yes, they held it steady all year long. They've made some of their own predictions of what they expect to do this year. We'll have to wait to see what we think will happen.
Absolutely.
But for last year, you were right. Nothing happened.
Josh, what was your first prediction?
So my first prediction, I followed off what was kind of your last prediction, which is what the S&P 500 did, if you're following the order of our episode. And I said that it would end at 4206.
What did it end at?
It ended at, let me pull up my piece of paper here.
4766.
4766. Thanks. There it is.
A little off.
So I was just a little shy of the mark.
Quite a bit shy, actually. You had a much better year in the markets than, well, as we'll find out soon, either of us anticipated.
Right. But between the two of us, I was closer just because I had predicted a little bit higher than you did. Not that I won in any way, shape, or form. Because I was wrong.
So Josh was a little light on his S&P number.
Yes.
My second prediction was that the U.S. would lag emerging markets and international stock markets for the year, and I was very wrong on that.
You are off.
In fact, S&P 500 for the year returned 28.71%.
It's an okay year.
So that's a pretty good year. Emerging market stocks were down 2.2%, and international stocks were up 11.78%. So yes. I was very much wrong.
Yeah, you're about 30% off on the one.
I know. So not good on either one of those. Josh, number 2 for you.
Yep. I made a
bold
prediction.
It's a bold prediction.
This one I took a stretch. I predicted that the national debt would increase.
And?
I did.
It did
surprisingly.
quite a lot.
A little bit went up. But yeah, that was a gimme down
Many
that one.
trillions, yes.
But yeah, the national debt did go up, and we had some arguments over the debt ceiling limits and all that fun stuff. Like always.
Yeah, always.
Good times.
My third bold prediction was that small cap U.S. stocks, small cap, would outperform large cap U.S. stocks. And
no,
I was once again wrong on that.
Yep.
As I mentioned, S&P was up 28.71%. The Russell 2000 was only up 14.82%.
Which, again, historically speaking, that's above average.
It is.
Just trailed the large caps.
Yeah, so if we think the S&P 500 returns, depending on what time frame you're looking, maybe 8 to 10% over longer time frames, small caps have actually averaged about 11. So it's a pretty good year.
Yep.
But not as good as I had anticipated.
Yes. So my next one was more of a personal one. Last year, the Cleveland baseball team was going through a rebranding and had yet to come up with a name. And so I predicted that Cleveland, whatever they were going to win the World Series.
And
They did not have a good year last year. They did not win the World Series.
but they did get a name.
They did get a name. They're the Cleveland Guardians.
Weren't they supposed to be the Spiders?
There was a lot thrown around in there. So, yeah.
Guardians
They're
it
the
is.
Guardians it is.
They did not win the World Series.
Did not. I was wrong.
My fourth prediction was that Bitcoin would drop below $20,000 per Bitcoin at some point during the year.
Yes.
And I thought I was on track, actually.
It had a drop. Got to
So
low
Bitcoin
30s.
got up over 60,000,
Yep.
and then it fell all the way under 30, not under 20. So
Yes.
I was technically incorrect, but it had a huge 50% drawdown.
Yep.
But still, not quite good enough, so I'm going to give myself no points.
Nope. So I made one, and this actually was a little bit of a stretch. I predicted that oil would, and I gave actually a number somewhere between 60 and 65 a barrel, but they would recover their losses from the prior year. And I was correct.
You nailed it.
Yeah.
Actually, oil ended the year of 2020 at $48 per barrel, and it ended 2021 at $75 per
Yep.
barrel, and it actually went up into the low 80s, I think. So you nailed that one right on the head.
So in that conversation, we mentioned that would be a big boost for energy stocks, which if you look at the sectors, energy was the best performing sector.
The energy sector was up 54.6% for 2021.
And big play off of that.
Exactly.
Recover oil.
My fifth, I'm on my fifth. My fifth bold prediction was that the S&P 500 would end the year at 4,000. That was 6% return in price, and with dividends, you would have got about a total return of about 8%.
So you're off by about 20%.
I was off by about 20%. I was going for more of a slightly below long-term average return, and we actually got way above. So once again, not near as bullish as I should have been on that. And Josh, your fifth and final.
Yeah. So with Bitcoin, you predicted a pullback. I predicted that Bitcoin would outperform gold.
Yeah.
And we had a conversation about that because in rising rate and inflationary time frames, gold is looked at as a hedge against inflation.
Yeah.
Historically, that's what a lot of people who own gold, that's one of the things they tout about it. I mean, last year there was high inflation. We had
Very high.
it was over 6% inflation.
6.8%.
So in that time frame, gold actually should have done well. But guess what?
It did not.
Bitcoin did outperform gold by quite a bit.
Yes.
In fact, gold pulled back a little bit in the time it was supposed to be shining. So yes that was a good.
So we had I think it's a whole different episode to talk about why gold is not an inflation hedge.
Yes,
Because it's not.
it's not.
But we had the highest inflation we've seen in 30 years.
Yep.
And gold ended 2020 at $18.88 per ounce, and then ended 2021 at $18.06 per ounce.
Yep.
So therefore,
Did not do well.
gold is not an inflation hedge.
Maybe it was less than you got inflation. It fell. I don't know. We could argue that, but that
like
doesn't
the
help.
inverse.
Yeah, it's the inverse. So you're good.
So yes, people.
So I was
gold,
correct
not
on
a-
that.
You were
but,
correct.
Yeah.
So that is Bitcoin had actually had a really good year.
Yes.
It was up It was up over 100%.
Yes.
My bonus here.
Yes. You got an extra one.
I do have a bonus here.
And I don't know the answer to this.
Well, it was up over 100. I should clarify. Bitcoin was up over 100% at one point.
Yeah,
I think it
and
pulled
pull
back.
back. Yeah.
Still, well outperforming gold. My bonus, which was a sixth prediction, was that Max Verstappen would win 2021's Formula One World Championship. And he did, and it went down to the last lap of the last race of the season, and he won it.
Wow.
It was incredible.
pretty exciting?
It was very dramatic, and it was very controversial.
Where was the race at?
Abu Dhabi,
Abu Dhabi.
which is
Yep.
in the UAE.
Yep.
It was very
Has the
dramatic.
world's
So
tallest building. Is that right?
that might be
Or did they someone
somewhere else in
build
the
over
Middle
it?
East.
It was
Yeah.
for a while, wasn't it?
In the UAE?
And yeah.
I don't know.
Oh.
This was in the Yas Marina circuit.
Okay.
I don't know. So that was my bold prediction. I also estimated that Marc Marquez would not win the MotoGP championship. And he did not, but he won a couple races, and that was very exciting for me. Those are personal things, but go Max. So if you're a Lewis fan and you're still crying about the controversial last lap of the race, it's time to move on to 2022.
That's right. It's over.
And speaking of moving on to 2022, before we do that, Josh,
Yes.
hit me up.
All
That
right.
joke of the week.
All right, here we go. So, telekinesis,
Okay.
the ability to move things around with your mind.
Yeah.
Yep. Do you know what the opposite of telekinesis is?
A concussion?
No.
Ha! Get it?
I
It's
got
moving
it.
your mind around.
It's Telekin nephew.
Oh,
Telekinesis.
nieces and nephews. It's a good one, Josh.
Yes, that's all I got.
Good one,
hilarious.
Josh. So it's time to get bold.
Yes.
It's time to brew the dark roast coffee and have an extremely bold conversation about some predictions
okay.
for 2022. And I also have 5 and a bonus. You do the same.
Okay.
So I will start us off. My prediction, I'm going to start us off with the S&P.
Okay.
My prediction for the S&P 500 is that we'll end at 5362. That's a very precise number.
It's exact.
And that is 12.5% in terms of price from where it ended 2021, or about a 14% total return, including about 1.5% in dividends.
Are you looking at statistically in Behest when you have a 20% plus year? What happens the following year?
So statistically speaking, after having a year like we did last year, you are, historically speaking, set for mid-teen returns the year after, which I thought seemed a bit more aggressive than I was feeling. Because I always feel like I'm going to get one of these right eventually by saying, oh, we had a great year last year. This is going to happen this year. So I just lowered it a couple percent from there. So, but I still think, even though fiscal policy's going to turn into a little bit of a drag because of some of those stimulus things pulling off, we've got extremely accommodative still monetary policy, even though that's going to slow down as well. Those are tailwinds, I think, overall. They're still good for stocks. Inflation, I think, will slow a little bit, and I'll get into a number later on that. I think the supply chain, the labor market woes are going to get a little bit better throughout this year. And I really think that from some of the research and stuff on the news and stuff I've been talking and reading about, the Omicron variant hopefully is the last major variant, allowing the world to kind of work back to normal as much as we can anyway. So that's kind of my bulk. I mean, that's kind of my base case is 12.5% price return for the S&P 500.
I'm going with 8%, which is 5147, roughly.
Roughly the long-term historical average.
Yeah,
of the stock
moderation
market.
and everything. So I'm going to go with the average and say we're going to have an average year. So there's a lot I've read on, if you look at economic guesses, they always are right around here, and they're usually wrong because although it averages 8, you don't get 8%.
It's either a huge one or a terrible one.
So I'm going to go with the middle and
go for it
and see what happens. So 8% return for the S&P 500.
My number 2 bold prediction is something that should sound a little familiar. I'm once again going to guess that emerging markets are going to outperform the U.S. this year in terms of the stocks. Emerging markets were down 2%. U.S. stocks were up 29%. So I feel like there's going to be some mean reversion. At some point, we have to get that. Valuations are extremely cheap relative to the U.S. in emerging markets. Now, there's a lot of uncertainty, especially in China, which are the bulk of emerging markets, in regards to regulation and how the government handles it.
Well, even China is talking about pulling some of their companies out of like the U.S. stock exchange.
Exactly. So that's a bold prediction.
Pretty bold.
We'll see.
All right. My second one is the Build Back Better bill.
BBB.
Yep. That some version of that will pass in 2022. Although part of my prediction is it's going to be a less imposing one than they had been messing around with at the
So they
end
were
of
talking
last year.
about $2 trillion.
Yes, I think it's going to be
Joe Manchin came back
like
at
1.7, 1.8. Yep.
You think even maybe a tick under that? Even?
I think that'll be the high end of it. I think they're going to find the things they know they're going to get done, build a bill out of that, and push that through.
Gotcha.
Yep.
I'm going to change the order of mine around a little bit.
Switch it up.
Going on politics, I think that the Republicans are going to sweep the midterms. I think that that's neither the Republicans hold majorities in neither the House nor the Senate at this point, but they're very slim margins.
Yes, on both.
And according to electionbettingodds.com, it's currently predicted that the Republicans are going to sweep both, and more certainly the House than the Senate. I really feel like there's some uncertainty going on with this economic recovery, and I think people might be looking for a little bit of a different direction. And if you think about what that would then equal, you would have a Democratic president with a Republican Congress, and typically that actually means no huge changes in terms of taxes and regulation, which is good for the markets, and kind of just keep on chugging along.
Yep. All right. Good prediction there. And historically speaking, when you look at a fully controlled Congress and presidency in that midterm election, you usually do see some sort of movement.
Flip.
Yep. So interesting. All right. So my number 3 is building off my Build Back Better plan, is that part of that they need to pay for. They were talking about different tax changes. And my prediction is that most Americans will not see a significant change in their taxes.
So by most Americans, are you saying, well, are we going to get the wealth tax everyone's been talking about?
Yeah. So I think that's still on the table, but the average American, your effective taxes are really not going to change. You may see some adjustments to corporate tax rates, and you may see some of those kind of crazier high net worth adjustments, but for the average American, I do not see a significant change in taxes.
Gotcha. My fourth prediction is that Bitcoin will hit $100,000 at some point.
Some point.
Now, it will be a choppy road, and I'm not guaranteeing it ends there. But I think at some point,
You can hit 100K.
it can hit 100K.
The high was what, 64?
68.
68? Okay. All right.
Yeah, so what
All
you
right.
got?
I'm going to switch outside of investing and talk about the Winter Olympics.
Ooh.
Yeah. So I guess the first prediction is we're going to have the Olympics.
Yep.
Because that could be up in the air, I guess.
Russia's still banned. That's
Yeah,
good.
It is there. It is for whatever. But I will say the U.S. will win the total medal count.
Gotcha.
I'm not always as confident in the gold medal count for the Winter Olympics because curling, which is one of my favorite sports, the U.S. does well, but it's not kind of their traditional sport.
It's not the things you grow up doing.
It isn't.
Like,
but up
I'm
in
gonna
Canada,
go to
I tell you
curl.
what, they
know.
love it.
Or some of those like Northern
Cold-
European
cold places.
Yeah, and we don't really have. If you look at our country as a whole, only a third of it has a crazy severe winter.
Yeah. For skiing and all that fun
Right,
stuff. Yep.
and a lot of countries are like 90% winter. So good call, good call. That will be exciting to see, and yeah, that's going to be one. I don't know. It seems like it's one of the first times we've had a back-to-back Olympics because of us moving the
'cause they
Summer
had to move
Olympics
it.
back a year. My fifth bold prediction is that, speaking of inflation, talked about it a little bit earlier, but I think inflation is going to moderate a bit. I think it's going to pull back a little bit. I do think we're going to still see some above trend inflation. So, 2.5%, 3% has kind of been the longer term average of inflation. I think we're going to end the year at about 3 to 4%, and I think that's the Fed's going to hike some rates probably in the middle of the year, somewhere in there, second half, and I think that's going to pull back a little bit on that inflation. Some of that supply chain issues, labor shortages, those are going to work themselves out, I think. So 3 to 4%, maybe hopefully the lower end of that three range by the end of the year will be good. So I'm going to call on inflation.
I'm going to stick with politics, but talk about regulation. I think by the end of the year, there will be some form of cryptocurrency regulation. Wow. Yeah, that's pretty big.
It's like the Wild West right now.
It is. And there's been talk back and forth, and no one's done anything. And I think next year, that seems like something that even in a divided Congress, enough of them may want to get it done that could get through.
Yeah.
That's my prediction. I don't know what it will be. I don't know what it will look like. I guess it'll be similar to what you see in a lot of kind of alternative investments of kind of regulation, but
The
nothing
wash
too
sale rules
significant.
are going to be applied.
Yeah, some of those type of things are pretty kind
Low-hanging fruit.
Yeah, that they can just knock out and say, hey, we're getting tough on crypto because
Exactly.
now you can not buy and sell without tax ramifications.
Exactly.
Ooh, scary.
I know.
Yep.
So my bonus,
Bonus.
the sixth bonus, I think Max is going to win his second
Oh, boy.
Formula One world title. It's the first year of new cars. We haven't even seen them yet.
Wait,
But-
so they can't use whatever they want?
No,
No,
not
they
at all.
have
This is very
rules.
strictly
Strict rules.
regulated,
Okay.
but new rules
Okay.
designed to make better racing. But I hear they're a handful to drive, and he is really good at driving cars that are hard to drive.
Okay.
So I think that is going to be good for him. I also think that it's too close to call in my other sports I follow.
Okay.
So specifically speaking of MotoGP and Supercross.
All
So
right.
there you go.
Now that the Cleveland Guardians have a name,
Yeah.
they have zero distractions, so they're going to win the World Series.
Okay, bold prediction
Yes,
again.
They're
here.
going all the way.
So that is a pretty bold bunch of predictions we got here.
Yes.
But always good to look back and see how wrong we were. But it just proves that, you can live in this world and follow the news and the markets all the time, and still looking out 1 year, it's really hard to call.
Yep.
Especially when we're still coming out of a pandemic. There's a lot of uncertainty. Washington's always got a lot of drama going on.
Yes.
So yeah, what do you really know? You know that we don't know much.
Yes.
But we know
Stick
that
to a plan.
stick
That's
to a
what we know.
plan, and long-term things are good.
Yes.
But the short-term things are uncertain. It's kind of where we're at.
That works.
So, as always, check out our free gift to you. It's a brief list of 8 principles of timeless investing. These are overarching investment themes meant to keep you on track to meet your long-term goals. A lot of these are short-term. Don't get bogged down in the short-term. So, long-term goals here. Check it out. It's free on our website. Josh, how can people help us grow this podcast?
Yeah, make sure you subscribe that way. Every Thursday you get our podcast. Also, leave a review if you listen on Apple Podcasts. And then if you have any questions, thoughts, or had your own predictions and want to let us know how you did, shoot us an email at hello@theinvesteddads.com. And then also, please share this podcast with anybody you think needs to know about our predictions, because those are very important and set in stone.
All right. Well, until next week.
We'll talk
Even
to you
next Thursday. Have a great week. All right. Bye.
Thank you for listening to the Invested Dads podcast. This episode has ended, but your journey towards a better financial future doesn't have to. Head over to theinvesteddads.com to access all the links and resources mentioned in today's show. If you enjoyed this episode and we had a positive impact on your life, leave us a review, click subscribe, and don't miss the next episode. Josh Robb and Austin Wilson work for Hicks & Zerker Capital Management. All opinions expressed by Josh, Austin, or any podcast guests are solely their own opinions and do not reflect the opinions of Hicks & Zerker Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hicks & Zerker Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment. Any investor who attempts to mimic the performance of an index would incur fees and expenses which would reduce returns. Securities investing involves risk, including the potential for loss of principal. There is no assurance that any investment plan or strategy will be successful.